Hey guys, welcome back to Money and Politics on the Thursday edition for April 22nd. I'm not going to go real long here tonight. Number one, I hope the shirt doesn't throw you off. You're probably going to get a moire pattern. It's actually a nice shirt I just got, but it's not the best for television. That aside, I had another day today where I had to drive to Chicago and back, so I was in the car for 7 hours total, as well as some quick business in Chicago. And so I'm not going to go real long, but I didn't want to skip tonight since I also skipped last night. And I wanted to focus just a little bit on some of what we've learned this week. Before I do that, let's get a quick update. In case you didn't see the market action of today, we closed up again, which is fortunate. As you can see along the top, right above the green line, the S&P was down, the Dow was down, the NASDAQ was down, and the Russell 2000 were down. I believe oil was also down. Actually, it was up slightly. So we are lucky that on one hand, the market, we were swimming against the course of the market, but it's not that surprising given that we were so beaten down. This is a 1 month chart. It's interesting to look here that as I tape this on the 22nd, April 14th, just 8 days ago, okay, basically a week ago, we were at, I have to lean in to see this, $3.36. If you go back about 2 weeks ago, what is that, $3.65? That seems like, oh my God, now, it almost seems like, holy cow. Imagine if we could go back there again. We can, we will. And if we look at the market action for today, let me just go through. Pretty solid, I mean, it fell off basically right at the beginning. This is kind of why, if you look at this chart, why you don't want to necessarily be trading in the first half hour of the day. Let the dust settle. And then you can kind of see the choppiness through the day, little downturn. So we were higher in the day, and we were at about $1.84. Ended up, as you see, about a dime below that. And so here we are. The big picture, I think, at least the great news is, for now, that we had at least 2 days of recovery, and hopefully we've stemmed the tide of panic. Okay. So that said, let me bring up, if you want to comment. It's just as well to comment on the video, the YouTube video, but if you want to email me something, here's the email that you can reach me at. And if you want to comment on Twitter, and you haven't already followed me, there you go. That's where you can follow me there. Now, aside from the action of today, and as I say, you can't read much out of a whole lot, the volume of today was 13.9 million shares, so respectable. Certainly nothing like what we had earlier in the week. I'm going from memory, but I think we had like 60 million shares. It was just a blowout when we went down the other day, and that was significant. So today was not light volume. It was, I would say, kind of average volume. Okay, so for that being said, let me bring up a couple of lessons, I think, while they're fresh in our mind. Let me bring up a couple of lessons of things that we have learned so far this week. We still got Friday as I tape this. But what have we learned? Number one, that volatility, and we've certainly had price volatility. Volatility is scary, but it can work to your advantage. And I think you all know now that it is indeed certainly scary. There's no question about that. As if somebody's kicking you right in the gut. And if we, again, go back to taking a look briefly, and we can look at the other day, we were down it got down to $1.08, and so now we're up to $1.70. So that's up almost 70%. So you could have made, if you had the fortitude to buy in then, a lot of money in a short amount of time. The other thing is number two, and we've talked about this before, control your emotions. And if the company story is solid, then keep the long view. Now, the problem with this week is that because of the Gold Panda article and the whole thing about the preferred shares, we had some question about whether the company was being upfront. It caused us to, for the first time, I think, have some questions about what was going on with the company. Heretofore, I had no reason to have any doubts about the company. But some serious issues were raised about the preferred shares. I'm not sure that they've been alleviated. At least it seems like we've stopped the panic so far. But this brings me to the third issue. Humbl, as a corporation, and again, I'm speaking as someone who's spent the last 30 years or so in communications. Humbl needs to control their message and be able to respond quicker to online attacks. We see this in politics now. We have people who are ready to respond in a political campaign. If you're attacked, you've got a response ad out in hours. And I think Humbl, in this case, I think the company is not prepared for crisis management in the realm of, I meant to say crisis communication. They're not prepared yet for crisis communication. They haven't had to be before, and I think this is a lesson for them to say, you know what, we do need to be prepared. We do need to have someone who can tell our story, designate that person beforehand. It's like the fireman. If there's a fire, you know who to call. You call the fire department. I don't know that Humbl has anyone to call when they're hit, and they might get hit again. So you got to have a designated spokesman, strategy, response strategy. Either bring someone internally and say, this is your responsibility, or hire some outside PR firm that you can have on retainer that can go and speak on these issues in concert with the approval, of course, of Brian Foote and the board. That's something that I would say that, this, Dorothy, we're not in Kansas anymore. We're not dealing with Block 30 Labs anymore. You're on the OTC. You're going to be going eventually to the NASDAQ, I would presume. So, develop a crisis communication strategy so that if someone comes out after you and throws a monkey wrench into your narrative, as we had this week from the Seeking Alpha article, you got to be prepared for that. And number 4, for the investors, I've talked about this before, keep some cash in reserve. If you were all in and then all of a sudden you find that the share drops precipitously and went down to $1.08, but you go, oh my God, I wish I could buy here, but I'm all committed. You want to find a way to put cash in reserve. I bought some more this week, and I had some DIG, and DIG was priced at yesterday or the day before about $112 a share. I sold one share. When you have prices that you want to buy, and it could have been forwardly, that's was down like to 30 cents. When you got Humbl, which was at about $1.30 the other day. One share of $112 goes a long way to pick up some more shares cheap. So think about managing your portfolio and managing your shares. And when sometimes something goes up, if you've got 10 shares, 20 shares, 50 shares of something, and you've got some good profit in it, you don't have to get out because you're thinking maybe it's going to go up higher. But go ahead and sell 1 share, 2 shares, 10 shares, whatever. And I look, if I had 112 share, 100, if I sell one share of Dig, let's say at $112, and I have $112 a share, and I can get shares of Humbl at, let's say, $1.30, I can buy a heck of a lot more shares. And then you say, well, if I bought, I can't do the math in my head, but let's just say, if you were able to buy 200 shares for what one share was, you're going to have a lot more transactions by having those more shares. And Humbl would have to go up only a small amount of money to make a decent profit when you're buying it that low, right? So the point is, you need to have some bullets in your financial gun. You need to keep some cash. That's your bullets. And as you are managing this portfolio, if you don't have cash, then put some cash in there. If you don't have it to save from your paycheck, then sell one share, sell two shares, take a little here, take a little there, build up your cash reserve. And as I've said before, there's two good reasons to have cash. And I would say you ought to try to keep about 10% of your portfolio in cash, because number one, when you get a sharp sell-off, and you could get a market-wide sell-off, or you could have a real crash as we had in Humbl, knowing that you've got a lot of cash is going to give you the emotional stability. As we go back to point number one here, volatility is scary, but if you go, yeah, but I got that cash, I'm sitting on cash, I can ride this out, it's going to give you emotional stability. Or you want the cash because, number two, when something that's a good company goes down and is way oversold, what good is it to be way oversold if you don't have the wherewithal to go in and buy it cheap, where you could lower your cost basis? So these are all obvious points I'm making, but they're maybe not obvious until someone just kind of points them out to you and brings it up. Okay. By the way, someone asked me the other name. They wrote me a letter there, and they go, Papa Humbl, I'm sorry to address you that way, but I don't know your name. So my name is Terry Martin. Terry Martin, okay. So that's it, because someone asked. So guys, I already went a lot longer. I didn't have any magnificent insights, but I did want to readdress some important points. Hopefully these are good points. I might tomorrow, the SEC, which you all may be already familiar with, the Securities and Exchange Commission, changed for the better, I think, some things on the short selling, which will make it harder for people who are trying to short stocks like Humbl to short us. So that's a good thing. And again, I don't have all the detail, because I said I was on the road for 7 hours today, but I might address that tomorrow. One last thing. Of a member of Humbl Nation, if you're on Twitter, Aaron Brazo, I believe, Aaron, I'm saying you right. I don't have your name right in front of me, so I hope I'm saying this all right. Anyway, she posted this, and I wanted to repost it. She reposted a tweet that was pretty interesting, and I wanted to share this with you for an important reason. It's research going into someone who had Parkinson's and the shakes. And let's just take a little view of this video real quickly, where a Norwegian researcher, as I remember the story here, I can't find it to read, but a Norwegian researcher put some electrical current through the body of this young man who had Parkinson's, and then has him doing similar, one with the electricity on and one without the electricity. The one on the left is the one without the electricity, where you see the full extent of his disability. And then you see how much greater his stability is with the electric current going through. I won't play the whole thing, but let's just take a quick look. So again, the left, you can see how he's shaking, how he walks stiff-legged, and on the right, he has the current going through. And here trying to touch his nose, and you see on the right how easy it is with the current, and on the left how it's virtually impossible. And folks, the reason I bring this up, I think it's a very good reminder that when we're trading stocks, it's easy to think this is about making money quick, flipping money here, doing that, money, 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 money. And in part, it is that. I mean, we want to make a profit. But the other thing that I've always said about investing that I think a lot of people don't understand is that when we invest, we as investors are financing the future. And Humbl is part of that future. We are financing changes. You could have your cell phone there. That was financed by the stock market. You can have the microwave oven, all the various things that make life, so much better. We see now we're financing the future of electric cars and better electric storage devices. Tesla's working on that. But when we can see what this means in human terms, this is why investing there's a great moral imperative to investing. This is not just about being, what our critics would say, being greedy bastards and trying to make money. Putting money behind good ideas is what investing is about. And yes, we'll make money. And I hope we make a lot of money. But it's not just about making money. It's about making the world a better place in terms of the human condition, in terms of transportation, in a whole host of ways. And folks, you should be proud that you're an investor. And if someone says, well, that's for me, I'm not, and they poo-poo it, educate them. Educate them on why you and I saving our money and investing we are part of a substantial effort to make the world a better place in all kinds of ways. So with that, I'll let you go. If you haven't subscribed, please do. We don't talk about Humbl every night, although we talk about it a lot, and of late it's been very newsworthy. But we're going to look at all kinds of issues over the course of the year, and I hope you'll join us. In the meantime, have a great day, and we will see you tomorrow night.